Okay, let's look at Friday, the 4th of December, of course, the first Friday of the month, but a very important day as we begin to wrap up the month of December. Thank you so much for joining us on the show this morning. Luke Ofojebe from Vertiva Capital Management. Of course, Luke is the head of equity analysis at the investment and securities company. Thank you, Luke. Thank you, Luke. We appreciate your time. Let's run through the equities market. We have quite a lot to chew about Nigeria as we wrap up the week. Yes, the stock market softened yesterday about 0.25%. The Ivorian market was better by 0.13%. The Egyptian stock market softened by less than 0.1%. Today is the beginning of the weekend in Egypt. The Kenyan market 0.37% positive, and the South African JSE will give the southern market one of the big jump. Zimbabwe went up also strongly yesterday, more than South Africa with about 2.3%, but the JSE who held on to the 58,000 level, just at the doorstep of a new threshold, 1.14%. In East Africa, the authorities are looking to protect the local sugar industry by giving the local sugar producers 2-year import safeguards, and the parliament passed a new bill around tea production. Of course, Kenya is one of the largest tea producers on the continent and within the region. The Securities and Exchange Commission in Kenya, called the CMA, the Capital Market Authority, has given approval for the Centum Real Estate $4 billion midterm note, which has been issued. And Ethiopia is looking to get additional $500 million from the World Bank, as in terms of like loan and a grant agreement to keep the economy running despite the problems, civil unrest, and the offensive that we've seen in the northern part of the country, the Tigray region, still ongoing. But the government forces says they are in control of the Tigray region's capital. Look, let's talk to this Kenyan sugar industry and the parliament passing bill on agriculture to protect local tea production. Do you see anything here that should resonate across beyond Kenya, perhaps into Nigeria?
So I think it's just similar to what the cocoa producers in West Africa are also doing, the likes of Ghana and Ivory Coast. So they are trying to influence the global market for sugar. And the reality is that the sugar business in this current period, I won't say it's close to its declining stage, but it's already at its maturity stage. And that's because we are now seeing a stronger advocacy for less consumption of sugar due to health reasons. In the UK, for instance, the consumption of sugar has dropped significantly. And even in the Asian markets, like India and China, we are seeing a similar trend. We are seeing a steep drop in the consumption of sugar. So that has really been affecting the major sugar producers in the world. So for Kenya, I mean, they're just trying whatever they can at this particular point in time to cushion the prices of sugar, trying to make sure that the revenue streams from sugar sales is being sustained. But the reality is that they won't be getting that anymore. What they are doing now is not something that is quite sustainable. I mean, we're already at a stage where globalization is happening at a rapid rate. You cannot run an isolated economy, and that's what the Nigerian government is also trying to do. I mean, you can't do that anymore. Globalization is happening at a rapid pace. You just need to play according to your comparative advantage. Where do you have comparative advantage? Where do you have your strengths? Try to magnify those strengths and try to ignore your weaknesses. So for trying to influence the sugar prices, I don't think that's the best route for them. Rather, they should focus on other aspects of the economy that they can leverage on and try to boost output from these other segments.
In terms of perhaps local demand, if you can push off whatever imports in dollar terms that you're getting, if you have some local because whoever is, nobody's, I'm not sure anyone is going to shut down sugar factory anywhere in the world anytime soon. Consumption will go down, yes, due to a number of reasons. But if you see some chunk of your FX going into sugar imports for domestic consumption, perhaps keeping a few industries running locally to satisfy that demand and create some jobs, locally speaking, through the agriculture value chain, sugarcane, whatever it is, perhaps that will make some little sense for you, since the whole industrialization train seems to be passed Africa by. So if you can do pockets of this, perhaps it will work. Maybe at least you can do a bit of things within the yourself, just like we're looking at oil as well, which is one another next big story from the West Africa and Nigeria with the OPEC. Deciding yesterday to taper down on a 7.7 million level to 2 million barrels in 2021. I'm sure this is one of the biggest story that everyone in the world took in overnight. Nigeria's vice president spoke about traditional methods of infrastructure building inadequate and harder to achieve by the government. I think it's a moment of reality check for the Nigerian government, now saying private partnership will have to be, public-private partnership is the way to go, and that the budgetary route of allocating resources to infrastructure every year in every budget will no longer bite it. That's one interesting story. And Togo announcing 2 new major deals with Olam and the Arise Special Economic Zone. IMF is on standby to give another set of funds to Ivory Coast, discussing 7th and 8th ECF and EFF sometime around the middle of next week. So, look, let's continue this around the OPEC first. Then we'll talk about infrastructure. Comment by Mr. Vice President yesterday after he met with the ministers of solid minerals and Minister of Industry, Trade and Investment, and of course a few others. But let's start with OPEC. What's in this for Nigeria?
So really, for OPEC, the plan initially was that you reduce the cuts from 7.7 million barrels to 5.7 million barrels through 2021. However, given what we are seeing right now, even despite the fact that we already have vaccines, effective vaccines for the virus, the reality is that we are not going to go back to what life used to be before the pandemic. So I'm going to start with the utilization of human capital, especially in the services industries. So this work from home would be the new normal for a number of companies in the services industry. So that's really going to take a lot of traffic off the, that's going to eliminate some amount of traffic and definitely going to impact oil demand. So that's one. Another one is the fact that this vaccine, yes, we expect it to be readily available in advanced economies like the US, Europe, and maybe China in the early parts of the year. But for other developing countries, the likes of Nigeria, countries in the Middle East, it might take much longer than that before these vaccines can be available. So what that means is that we do not see oil demand recovering to pre-COVID-19 levels, even in 2021. Of course, we do expect recoveries, but is it going to get back to 2019 levels? No. So on that basis, OPEC is looking at trying to control the reduction of cuts, and that's what the meeting was all about. So they've agreed to have a cautious control of reducing cuts through 2021. So bringing it back home, it's a mixed bag for Nigeria in the sense that oil prices will rise. I mean, we've seen it lately. Oil Brent price, for instance, rose to about $49 per barrel. So it's only a matter of days before it gets to $50 per barrel, which is a plus for the Nigerian economy. However, on the other side, prior to 2020, Nigeria was not really complying with OPEC cuts. But this time around, the game has changed. We've seen pressures from OPEC and its allies on Nigeria on complying with cuts, and that was why we saw better than expected compliance in the month of August and September. And the thing is that we are going to see more of that pressure also in 2021. So we will not see Nigerian production getting rising beyond 1.8 million barrels per day over the course of 2021. So that's really not a good one for the country. But net, I think it's going to leave Nigeria in a better position compared to 2020, where oil prices were very low. At the same time, production also was very low. So overall, it's still going to be a much better situation for the Nigerian economy in 2021.
Great. Well, I'm interested in this particular story because now that we're looking at OPEC oil prices at this level, some folks says Nigeria needs oil prices at about $144 a barrel to be able to balance its budget. That looks like something way out of this world. Maybe when we turn this next century, we will get that, but it doesn't look like that is happening anytime soon, unless perhaps the entire Middle East sank to under the sea. I don't know. But somehow something had to happen from the another planet to make $144 a barrel oil happen. But who can tell? I'm sure it'll be a good laugh. So
Yeah.
infrastructure becomes a problem. So this is the government realizing that it doesn't have the envelope, the size of envelope, $3 trillion over the next 30 years. Mr. Vice President yesterday says, look, if Nigeria spends their 2020 total budget, 10.6 trillion naira, you will need 108 years of that consistent total spending in infrastructure to get the level of infrastructure that we need. I'm sure we know what that means. Private sector.
Clearly. I've always said this. So the major challenge we have in terms of having the private sector participating in infrastructure development has always been the issue of uncertainty in the economy and also not having a friendly environment for private investors. So for instance, looking at the oil and gas industry that we just spoke about, the PIGB, when is it going to be signed into law? We don't know. Of course, the lower chamber of the National Assembly recently passed it for second reading. But how soon will it be signed into law? It still remains anybody's guess. So that's one. Another one is that of the environment, really. We are now in an economy where, the reality is that oil at, like you mentioned earlier, having oil at $100 per barrel, that's already gone. We can't have that anymore. That's the reality on ground. So the government, due to the fact that oil revenue has dropped significantly, the government is looking at other sources through which it can raise money to finance its budget. And over the last few years, we've seen the government, focusing more on taxes. In 2019, they raised taxes for PLCs, that's for deep water crude production. Then this year, they raised VAT from 5% to 7.5%. The news from various media houses now is that they might be raising it from 7.5% to 10% in 2021. And that's really.
But look, this is VAT in Kenya this morning, starting from January 1st, it's moving to about 16% from 14%.
Yeah, so we cannot really compare our economy with that of Kenya, because the Kenya economy is more diversified compared to the Nigerian economy. Look at our exports. Oil accounts for about 90%. We don't really get anything from exports other than crude. So you need to come up with policies that will attract investors into our sector such that they can help us to reduce our burden on imports. And the way to do this is not by raising taxes. You need to keep taxes low. You need to attract these people. You need to bring these people in. And we are talking about an economy where consumer spend has been on a downtrend over the last 5 years due to FX devaluation. And so these policies are counterintuitive. So at the moment, we should be looking at how to keep the environment friendly for foreign investors. And right now, what the government has been doing, trying to address FX, trying to keep FX stable. When you have a problem in critical thinking, when you have a problem, you don't address the consequence of the problem. FX, the issue of FX is a consequence of the Nigerian problem. What is the Nigerian problem? Having a more diversified economy, trying to grow employment rates, trying to attract foreign investors into our economy. That is our major problem, not addressing FX. Let's fix these issues. How do we make the economy diversified? By inviting foreign investors, by attracting them to come and invest in the economy. Look at the power sector, for instance, is one of the most profitable sectors in Nigeria, but are we seeing foreign investors in that space? No, that's because of governments interfering with the sector. We see how the sector being highly regulated, and gas pricing is still highly regulated in that market. So that's not good um, for um, for foreign investors, really. So these are things that the government needs to address. When we can address these things, definitely the private investors will be interested in participating in infrastructure development, which will be good for us in the long run.
I completely agree with you. Let's fix let's get to the root of the matter and let's get business to hands up. Because if you look at a three-page statement released by the media office of the vice president yesterday, well said, well articulated in terms of the government realizing that it doesn't have the envelope, it doesn't have the check to write for every piece of infrastructure at all levels, from local, state to federal, across the country. So how do you now get foreign direct investors? How do you get even domestic capital to come in here? How do you incentivize them to come in? Something critical will have to be done beyond the current thinking of setting up an infrastructure company or setting up a BPP, whatever arrangement. So look, you need to make laws and hands off a whole lot of things and let the private sector take the lead. But for me, it looks like the government is still trying to midwife the entire process by trying to put some PPP arrangements in place, Ministry of Finance, and let them come together with the BPE to lead. Look, you just need to let go, as it were, and then see and just regulate and just try to monitor and be sure that everybody play according to the rule of the game. We haven't unlocked that capital massively the way Egypt is doing, for example. We haven't been able to do that. But I think we're knocking on the door. Hope that some very soon the glass ceiling will be broken. So South Africa, yesterday, the President Ramaphosa issued some notice that certain regions of the country might be going into another lockdown. There are restrictions on the sale of alcohol only between Monday and Thursdays. There'll be no sale of alcohol over the weekend. Some restrictions are also being put in place. It hasn't gotten to the big areas such as Pretoria or Johannesburg or Durban yet, or the Soweto area. But of all these, there are concerns as we see number of virus cases climb in Africa's most advanced economy. The impact on the banks, the impact on the economy, the jury is out there on how this will go. Botswana's holding rate at 3.75%. Yesterday, that's the final meeting for the year. Malawi inflation declined 3.7 on the back of strong agriculture produce. South Africa is looking for $400 million. That's the price tag for the sale of his stake in troubled South African airlines. Look, we're not having a resurgence, or are we having a resurgence of the virus cases in Nigeria? Do you think we are behaving well enough? Would we behave well enough during this Christmas year-end season such that we will do, thank God, it's Friday, in a reasonable and sensible way as not to increase infestations and go to another lockdown, perhaps sometime in the new year, which will be terrible for an economy that is already wobbling?
So really speaking on the pandemic here in Nigeria, I think the fear factor has already left us. So Nigerians are no longer that scared as they were in April, June, and the like. So right now it's more like, oh, they've seen the numbers. The fatality rates is now reducing. We are seeing more cases. However, the number of deaths has been relatively static. So fatality rate is actually reducing. So people no longer have that fear that, oh, is quite something deadly and the like. So they are going about, carrying out their usual daily activities. And more so, I don't know, maybe it's because of the climate. Maybe that's why the fatality rate here in West Africa is um, much less than what we find in advanced economies like Europe um, and the US. But the reality is that it's something we've pushed aside. We are not really seeing the government, trying to come up with measures as regards social distancing anymore. So it's more like everybody's just going back to what they used to do before the pandemic. So overall, looking forward, we do not think it's something that Nigerians will be focusing mainly on. Of course, among the elites, they are still conscious of it. For businesses, working from
For
home,
schools.
yes, work and schools as well. For working from home, is the new normal. For meetings, it's virtual meetings, just like we are having this right now. So yeah, but for the other sets of people in society, it's just it's COVID-19, and there's really nothing to be scared of. So they are just back to their usual businesses, and I think that will just be the norm
Interesting.
going forward. Yeah.
Interesting. Interesting how Nigerians just look at the fatalities number, and if it's not climbing rapidly, why should I get so scared? I think Nigerians just go to the just look at the worst case scenario and do the math, do it in a worst case scenario, and just walk back from a worst case scenario to best case scenario, then stay somewhere in the middle and just look at the best case and just move on and say, well, if I'm not going to die, if the numbers of deaths are not climbing, why should I bother so much? Well, I could might as well get it like malaria and just get out of it one way or the other and just move on as long as I'm still on my 2 feet. What happened? It's just, but we just hope somehow that we're not wrong with this one way or the other. I just hope that we're not wrong, that we know what we're doing and that nature, whatever it is, will be providence or whatever will be, who will smile on us, who everybody's just gone on the street, everywhere, just commingling and all of that. It's very surprising, but let's hope that it stays that way. On a final note is the North African space, and the whole story is the new AfCFTA. The countdown has already started. Today, the AfCFTA Business Forum organized by the African Union is taking place from about 10 o'clock Nigerian time, all ahead of January 1st, 2021. Afrexim Bank has launched Africa Trade Exchange Platform. Everyone should get involved in this. A whole lot of developments are taking place. And this is one good story, final note we want to say this morning. So let me give Luke just the final 1 minute on your thoughts on this AfCFTA now that it looks like there is no going back.
Yes, it's something that is needed for the African continent. Going by consensus estimates, it has the prospect of leading to about 20% growth in the African economy over the next 5 years. So it was delayed in 2020 due to the pandemic. The expectation was that it would take effect from the month of July, but due to lockdowns in several countries, a number of governments decided to just focus on their individual economies. But right now that things are actually going back to um, um, the economies are recovering from the pandemic, and a number of these governments are now channeling their focus back to AfCFTA. So on that basis, I do think that it's likely that 2021 might just be the year when it will take effect. The implications is that the implication of this agreement is that countries like Nigeria we have to sit up because given the land borders that were closed since the month of September in 2019, I don't think the government still have the luxury to maintain that stance. So the government will have to reopen its borders and just allow efficiency dictates people who still want to be in business and people want to exit their various businesses, because that's the way forward. You want to spur efficiency across the African continent. You want people who have comparative advantage in some goods to play more in those goods, and in areas where they don't really have that advantage, they need to import from fellow African countries, and which is very good for the continent really. So I just think for Nigeria, I think that might lead to the opening of borders when it takes effect.
The opening of borders will have to happen before the end of the year. Technically speaking, it's going to be in line with the new AfCFTA. I think Nigeria might just do something. But I think we're in the final days of the land border closure for Nigeria, by the way. I think the final days are here, or the final weeks are here. It has to happen between now and January, one way or the other, as soon as they take off. Unless we're going to be, we're going to stand out like a sore thumb, and the country will still stand up like a sore thumb in the Committee of Nations when 1st of January 2021 gets here. Thank you so much, Luko Fojebe. We appreciate your time. From Vetera Capital, Head of Equity Research, a very robust conversation with you this morning. Have a great weekend and see you back next week. Thank you, everyone. I am Bosin Namafai, and I'll see you again. Bye for now.